I don't think anybody would argue that women like clothing and women like to shop for clothing and that they spend a lot of money on clothing if they want to keep up. So imagine an idea where you come up with a business plan that instead of selling clothing to women, you rent it to them on a subscription basis. Sounds pretty good, isn't it? Especially from the consumer point of view. But does this sound like a great business? So stick around to find out. If you're new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, which is a website dedicated to microcap stocks, which are very much underfollowed by the investment industry. I also published about 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created valueinvestinguniversity.com, which is a free resource to make you a more intelligent investor. Educated people, whether they are from Harvard, from California, the Silicon Valley, they like to come up with ways to disrupt industries, as if they were born to disrupt something. The problem is that sometimes it's not worth disrupting something because it's not worth pursuing a particular business. Today I'm talking about Rent the Runway business, which on the surface it looks kind of cool, but I don't think it makes sense as a business, and you'll find out in this video why. What this company does is it rents designer clothing to women on a subscription basis. It also has a little bit of a business model of reselling used clothes, but the majority of its business is renting designer clothes to women. And from the point of view of women, it's a fantastic opportunity because you see, when women buy clothes, they obviously want to buy, quality clothes. I mean, not all of them, but you want to buy quality clothes and you don't want to wear them too many times. A lot of times they end up buying something expensive and they end up wearing it maybe 2 or 4 times, and then they get bored and they don't want to be seen in the same clothing again, so they continue shopping. And it's not very efficient. Rent the Runway was founded as an idea to fix that. So instead of women spending so much money on designer clothes, they can instead rent them on a subscription basis. And that's the model. They have different plans for paying X number of dollars per month, and then they get certain shipments, and if they want to get more, then it's a different plan. From the company's point of view, it's great. It's a recurring business model, right? Which, I love recurring business models and it sounds great. But when you really start to understand what this business is all about, it starts to sound not so great. And I have a particular experience in this because some of you know that I am a ballroom dancer, and more specifically a competitive ballroom dancer. In the competitive world, the outfits is a big deal, especially ladies' dresses are very important and they're very expensive. It costs about $3,000 to have a dress for a competition made because it's very labor intensive and that dress is unique to that person. So in other words, there's no other dress like it. It's made from scratch, designed from scratch, and it costs this much money. So this creates a particular problem, is that not everybody can afford those kinds of dresses. Some people buy used dresses, some people make their own, and then there's also the rental business. I've seen this business on all ends. I've seen the business from the point of view of how you make dresses and you sell them. I've seen the point of view of how you buy the dress from a maker. I've seen the business of how you can rent a dress. And I've seen a business of how you can teach someone how to make ballroom dresses. And this is where I come in. My partner noticed this problem in the ballroom dance industry, that there was no information on how to make ballroom dresses. So we partnered up with a dressmaker from New York and we created a DVD series. Back then it was a DVD series. So you literally there was this company called Kunaki that you uploaded like the artwork to them, and then they printed these DVDs and then they packaged them like this, and then they directly shipped it to the customer. And then of course, now it's different. Nobody's buying it on DVDs. It's all downloadable. But I'm talking about this business is because We created these DVDs and we started selling them all over the world because nobody had that kind of product. We were the only one on the market that had that product. We didn't even have to advertise. We were selling them. It was like a package of 13. This is just one DVD, but it was like a series of like 13. So it was 6 for the dress, 3 for the guy's shirt, and 4 for the guy's pants. So we were selling them all, and we still do, for $300, okay? So what does it cost us to sell $300 worth of these videos? Nothing. 100% profit margin. Well, almost 100%, maybe 99 or 95, because we do have to pay PayPal that takes the payment, right? We don't have to do anything. These DVDs have been selling for years. They don't get old, they don't depreciate, they always sell. Now compare this to a business of renting dresses. What do you have to do to generate income from the rental? You have to buy the dress, right? You have to buy the dress, so you have to spend $3,000 in order for you to start generating income. So which income stream is better? This income stream or the rental income stream? Obviously, the video is better and it's more scalable because we can sell 1 million of these and it's not going to cost us any more. And in order to scale the rental business, you have to have more of dresses in your inventory, right? So it's capital intensive to acquire them. And then, not only that, those dresses depreciate very fast. How many times can you rent them out before they become completely useless? I don't know, maybe 10 times, maybe 20 times, maybe 15 times. And then every time you rent it out, the dress becomes worse and worse and worse. And when you rent out the dress and then it comes back to you, well, first of all, you have to ship it, so that costs money. You lose the opportunity to rent it while it's being shipped. That's one, right? Then when the customer gets it, holds it for 7 days or whatever, then they ship it back to you. Somebody has to pay for the shipping both ways. Whether the customer pays for it or you pay for it, it's an expense. So your margins are lower. And then when the dress comes to you, it has to be fixed, right? Somebody has to fix it. You have to fix it because it's, you have to fix it. It costs to fix it. And then you have to wash it, right? Because it's dirty. You can't rent it out to someone else without washing it. From that point of view, it's like a headache. It's such a headache business. You have to hustle so much to generate revenue. And then the asset that you have, because the asset is the inventory of dresses, depreciates very fast. So you have to keep replenishing your inventory, which is capital intensive, which is, even though the company thinks that it has recurring revenues, those recurring revenues are not that great. And your assets depreciate and it's capital intensive. So it's not a great business model. So now let's go back to Rent the Runway. They call themselves as the closet in the cloud because they have thousands and thousands of outfits, dresses, and then they say that this is like closet in the clouds. I would say that's crazy. It's more like closet in the warehouse. That's what it is, because it's not in a cloud. They're saying it's in the cloud because they want to make it look like it's a SaaS business model where it's just closet in their warehouse. So they have to have the big warehouse. They have to have a huge inventory of dresses, which are expensive because they're designer clothes, right? Huge warehouse. The inventory is a nightmare, which of course this could be an advantage because if they have a way of managing that inventory, it could be a competitive advantage. And another competitive advantage of how you can differentiate yourself from the competitors is to have a huge selection of dresses. I mean, that's why they had to go public. Rent the Runway did go public in October 2021 at the stock price of $21 per share and the valuation of 1.7 billion. 1.7 billion. And at that time, the revenues were about 100 million, like very low quality revenues, and they were priced at 17 times revenues. And of course, since then, the stock price has been in a free fall. And now, of course, I'm looking at it because anytime something goes down like this, you should look at it. I mean, is this a good deal? And so far, from what I'm looking at this business, I don't want it at any price. I think that it can actually go to zero because I don't think it's a very good business model. Because as I said, they have to have this warehouse. Well, that costs money to warehouse this. It costs money to get all these outfits and dresses. It costs huge amounts of money to have them all dry cleaned and put away and shipped and all this. So it's also labor intensive. And then they have to be fixed. When they come back and something is broken, they have to be fixed. Now, on the consumer side, the consumer expects a lot and they don't want to pay a lot. And they don't want to be necessarily on a subscription basis. They don't want to have another mortgage payment. And the company wants a subscription revenue because the subscription business model is the best revenue model that you can have, but it doesn't really work that well for the consumers. And the consumers also have many different choices. They can go and buy new clothing at a mall. They can do it online. They can also buy used clothing from Poshmark, which I made a separate video about. Poshmark is a direct competitor for the rental business. And so if you're the consumer, and if you are renting a dress that's worth $3,000 and you're renting this for $300, okay? You only have it for a week, versus you can go to Poshmark and buy maybe a dress like this for the same price or less, because clothing like this, once it's worn, it depreciates like a car, like a new car. When you drive it the lot, it drops in value like 50%. So that's a big competitor. But I guess the worst thing about this business is that your assets are all these clothes, and then they depreciate so fast, and in order to replenish them, it is so incredibly capital intensive. Runway, calling itself Closet in the Cloud, they're doing this because they want to be viewed as a technology company. This is not a technology company. This is a brick and mortar type of business, very labor intensive, very capital intensive. Things have to be shipped. Yes, they're using technology to manage that business, but they're not a technology company because the margins and then the kind of business economics doesn't reflect that. In 2021, the revenues were 127 million and they managed to lose 172 million. That's an incredible loss. You see, I don't really necessarily mind when some businesses are losing money, especially when they are growing, and especially when they are reinvesting like the gross profit back into marketing because they are reinvesting and growing a moat. In this case, I don't even see how it's worth growing a business like this because it's a bad business to begin with. In summary, I wanted to make this video because I don't just want to make videos about companies that we should buy. I want to make videos about companies that you should avoid so that you can go through that exercise of how to look at businesses and determine whether they're good. You have Runway type of business, and then in another video you saw how I talked about Poshmark. Two businesses that are involved in the clothing or fashion industry. One is a wonderful business model, high profit margins, repeat customers. You want to grow this kind of business and you want to own this kind of business, assuming of course the price is right. This business where it's capital intensive, low margins, a lot of hassle to make a buck, lots of competition, both stocks are down a lot. One is not worth touching at any price because I think it can go to zero because of the flawed business model or below average business model. The other one, absolutely fantastic. So when this one is down, it's worth picking up. When this one is down, it's worth letting it die.